The other one also has to be the adoption of not necessarily new, but alternative instruments that would require government. For instance, we do have an infrastructure bond in Kenya. Why can't we have an energy bond in Uganda?
Welcome again to our podcast. This time we are hosting another distinguished gentleman, the MD for KCB Bank. And we are also privileged to know that KCB was part of the syndicate that has provided the financing or been part of the financial closure for our pipeline, the East African Crude Oil Pipeline. Very welcome, Mr. Edgar Byama. So this is basically to understand a couple of the things that the bank does and how they are ready and able to support the energy conversation. But my first question to you would be, what was the experience, and if there's anything you'd like to share with us regarding the ECOP financing and how it was pulled off?
Thank you, Agri. First of all, KCB is a universal bank, largest balance sheet in the region, and does finance everything from government-backed projects to micro and SME customers. Now, going back to your question specifically on ECOP, I think that most, I would say, and I would like to comment the other players in the first tranche, was walking the journey with government and ECOP. It did remain drawn out, because for so many issues, deal closure was very drawn out for a very long time. That did put off a couple of probably other players, but for KCB's role, we did walk the journey with them together with the lead arranger. And maybe what I will say at this juncture is we remain committed to the project and would be available for discussions on further funding.
Just a rejoinder to that, were there any specific policy shifts or directions you needed government to do, or you just came in purely as a financial partner?
For ECOP specifically, no. I think government was very clear from the onset, but largely ECOP itself, because it's an entity in which government is just a shareholder, it was very clear on what they wanted to do. There were assurances from the two key partners that are the two producers, Sinok and Total. So the issue was largely the delay closure, and of course a couple of other financials pulling out. And but I think the government's role really was to stay the course and highlight the socio-economic transformative effect that pipeline and ultimately oil flowing to the international markets would have on the country. I think that was very critical for any financial look.
Thank you so much for that. So now we've just been over, this is the second day of the Energy Convention, and yesterday the minister highlighted to us some key commitments of the government towards the energy transition plan of the country. 52,000 megawatts to be done by 2040, and about 24,000 megawatts to come from nuclear, and about 20,000 megawatts to come directly from hydro, and then the balance from all the other mixed energy sources. So the question I wanted to ask is that if estimate is about $850 million per year that is required for these investments, from your side as a banker, from your side as a financial institution, knowing that government cannot have to have this money all together for these projects, how would you want to play? And are there any policy directions that probably government needs to put into place to give that confidence and the safety net for financial institutions to be able to come in and support our development?
No, thank you. I agree. I like the energy, the fact that the government does have an energy transition plan. In this world where we are really addressing climate change and the need for climate financing or green financing, it is imperative that first and foremost you recognize the need, and then you do have a plan. Now, the amounts you speak of are quite staggering for our economy, but I think these are amounts that government can actually obtain if it does take a fairly holistic approach. One is the aspect of incentives. Is there an incentive for me moving from, say, thermal or the use of biogas to solar? What does that mean for the solar provider or solar equipment provider, or even the solar mini grid investor? What does that mean from a tax, from an investment license, and all that kind of infrastructure? So the issue of incentives is very, very critical. The other one is policy. I think government has to ensure over this period at least, and further beyond, that there is policy clarity and consistency. Many times you might be clear, but you don't stick to the policy. I think for much of these investments, they are long-term, would require a horizon of at least 15 years plus, and anyone putting in money that wants to be assured that whether it is the tax regime, whether it is the government's attitude to private players in the sector will not change overnight. So that's a very, very critical thing from a policy perspective. The other one also has to be the adoption of not necessarily new but alternative instruments that would require government. For instance, we do have an infrastructure bond in Kenya. Why can't we have an energy bond in Uganda, specifically to raise money for part of this energy transition across the various sources of energy that they have highlighted? So to me, the government has to probably collaborate very, very actively with both the financial but also the broader private sector to ensure that some of the goals of this energy transition are achieved.
Okay, I think when you speak about the energy bonds, is that something that you would wish for a chamber, for example, to try and drive with government so we can then see how to get it up and running? Because either way, there is going to be financing. Either way, the government may not be able to raise this amount of money because of so many competing demands from budget support. So I think that's a takeaway for us, and we'll be able to see how we can engage with the banking fraternity to come up with a good proposal that we can be able to push forward. But then there's also, yesterday we were talking with the executive director for the Electricity Regulatory Authority, and they did indicate that they have opened up the transmission space. So, predominantly generation, they did provide what they called independent power projects, and now they are opening up the independent transmission projects. Basically, same model where instead of having a PPA, you'll have, is it a TTA or something of that nature, that you agree on a specific tariff or wheeling charge for a period of time. So you invest in the infrastructure. Now, my question then would be that historically, IPPs have also been predominantly funded by foreign entities, and there has not been enough play with Ugandan financial institutions. Would you consider that as an opportunity, and how would we support the financial sector in Uganda to be able to partake of this opportunity that is new?
One, I think it's a very good direction that the government is taking. The commercial or the banks, for that sake, will always look for opportunity and then obviously factor in the risk. This is obviously an opportunity that, one, obviously has the socio-economic agenda, two, will provide reliable cash flows in a market with growing demand. So it is something we would need to look at. But I think apart from government opening up and liberalizing the transmission sector, there have to be other aspects that look at who the players will be, the firms that will be taking up these IPPs or PPAs in this case, and what it would mean, what kind of structure, financing, and incentive they would have. A lot of the financing that would come in from the banks is actually going to be based on projected revenues rather than collateral. So it is something of non-recourse funding, which makes it important that we do have assurance of government paying when it's due. 2, that some of the aspects in terms of transmission, which probably might be beyond the farm, the government can encourage. For instance, increasing the consumer on-grid growth. So, but really, from a bank perspective, it is something we welcome. Energy will keep growing as the population grows and as the economy transforms. So, to me, what I would want is maybe for you as the chamber, together with government, to start involving maybe the financial sector, banks, private, much earlier. Even possible engage us in policy, in some of these policy formulation for our ideas, because that means we move much faster to see fruition of some of the financing needs.
I think that's a good takeaway, because you talked about the guarantee for payment. Because under IPPs, they used to have the MIGA, Multilateral Insurance Guarantee Agreement, which then de-risked financiers, because at whatever default, they would still get paid, which probably is not available for the ITP. So that's a point taken, and I think we are going to have those engagements and try to create a task force with the finance fraternity and government, especially around the energy projects. So thank you very much, Mr. Edgar Byama. Any parting shots before we let you go because of your busy schedule?
No, thank you, Andrew. Rather agree. It's always a pleasure to be here. Like I said, we are passionate about energy and infrastructure in general at KCB Bank, Uganda, and the group at large. And as partners with you, we'll continue to walk this journey with you. But it's also, we are speaking about the future. We now speak of aspects of green financing, focusing on sustainability, which are part and parcel of our strategy. So for me, coming here, it is about thinking and planting the seeds for the future of the country and the economy. Thank you very much.
Yeah, you have it. Thank you very much. See you again next time.
Uganda Chamber of Energy and Minerals, for a sustainable future.